You've been there before. You catch a good trend, you're all excited, you trail your stop loss to protect your profits. Great, right? But suddenly, boom, right, you're out before the stock surges another 20%. I know it can be really frustrating, right? Well, it makes you question whether your whole strategy or system is right. In this video, I'll show you exactly how I use this ATR-based trailing stops based on my one good trend strategy to actually lock in profits without getting shaken out so easily. You see how I use the 1GT Pro indicator, right, to ride trends with confidence, to actually let our winners run, right, without second guessing, without thinking too much. Let's go. So some of the struggles that most traders face would be that they put their stop loss too tight. What is a stop loss? A stop loss is a kind of like a price level by if prices to dip down to a certain level, you get out automatically, right? So it's good to have a stop loss, but if you put it too tight, sometimes it hit it and it starts rebounding and it goes even higher. So that's the struggle that most traders actually face, right? It's too tight and it got stopped out and it starts going higher. And another struggle would be that the stop loss is too low, right? So the price go down and down and down and hit your stop loss and you lose more money, right? So too tight, too wide, both not correct. So the solution is to use a structured volatility-based trailing stop, right? Whereby, it is not just some arbitrary price level or based on a fixed dollar amount, all right? It's based on the proven formula. So the key here is to use the structured volatility-based trailing stop, right? Not just some arbitrary price level to get out or some fixed dollar price. And that brings me to this term called the ATR, average true range. So let me just write down what exactly is ATR, right? So ATR stands for average true range, right? It measures the volatility of a stock, right? Essentially, how much does a stock move on average daily, right? So if it's like hugely volatile going up and down, well, then the ATR will be higher. But if it doesn't really move much, right? It's just like going up 1 or 2 cents, well, then the ATR is smaller. So from my one good trend strategy, right, I have this indicator that I call the 1GT Pro indicator. And, in this indicator, there's this trailing support line that's based off the ATR formula. So this trailing support line basically is below the price, is a factor of ATR, of the average true range, and it follows the price as it moves up. So let me just give you an example, right? So this is a diagram right over here. And, as I say, most of the time, people might have stop losses along the way, right? So you can see that the price is obviously kind of moving up in terms of this diagram. So it's a very good uptrend, I would say. But most people, maybe at this point in time, they may have seen a bit of the support coming out, right? So there's a little bit of support, but one fine day, perhaps prices have dipped down to this support level, pump, all right? And they get out, right? Because they have a stop loss below a support level, a horizontal support, and they get out. And what happens? The price starts moving another 20% because you are using kind of like a stop loss based on a specific price level. It's just based on a temporary support level, right? And you get stopped out and you get shaken out before it moves even higher. So what you could do is that based on this ATR, we have this trailing support line. So let me just show you what I mean. So this trailing support, it's below the price, right? Below the price, and it follows the price as it moves up. Something like that, right? Look at this right away. So it follows the price as it moves up. Let me just go to remove this thing over here, all right? And it gives it the breathing room to hopefully move higher, all right? It accounts for volatility, right? So as long as it's staying above this trailing, this is what we call a trailing support line, all right, whereby it accounts for volatility, it is still in a pretty good uptrending movement. So in this case right over here, you can see that actually, when it got stopped out, just because it broke below the horizontal support line, by right, obviously it is still above the trailing support, whereby it accounts for volatility. It's actually still good to go because it might just come down a little bit. It used up the volatility space, it used up the breathing room, and you take a little bit of a rest, a bit of a selling, but buyers can start coming back and it starts pushing even higher, all right? So you probably would not want to get out at point in time, right? Because we are still above this trailing support level. So what you could do is to put your stop loss or your trailing stop loss below, right, below this trailing support level. So as the trailing support level goes higher, what you could do is to have your stop loss go higher and higher below, right, below this trailing support line, all right? But one fine day, of course, if prices were to kind of like, go below, all right, the trailing support line, then you want to be careful. That means that, we have given it the space to breathe, to be above it, but yet it used up all the space and we break below the trailing support line. That means that some heavy selling can come back, all right? So that's where you want to take some profit. Do not be greedy, all right? Get out first, maybe wait for a re-entry as it dips to a lower level. So let's take a look at this stock called Meta, one of the very popular US stocks, and let's see how trailing support level could actually guide you, or maybe when to get out when the time actually comes. All right, so for Meta, you could see that, well, we have actually been in a pretty good long-term uptrend since last year, 2023, 2024. Look at the red and the blue line 100 days moving average, and the blue line's a 200 days moving average. Both of them have been pointing up, right? Red above the blue, so longer term trend is up. That's where we want to think about buying stocks like this, because we want to be in the same direction as the longer term trend, right? That's where the odds of winning are higher when you are along or aligned with the trend. Does it make sense? All right. But now let's see if we can pull out this trailing support. So as I say, right, from my one good trend strategy, right, I have this indicator called the one good trend pro indicator, right? And on this indicator, we have this trailing support and resistance, right? That's one of the very powerful feature as part of this indicator. There's just one confirmation out of 7 confirmations that we look out for. So let me just turn this on right now. And there we go, pam, you can see, right? Now, as it moves up, right? As it moves up, we actually have this trailing support line that I talked about just now, right? So this trailing support line pops up and it follows Meta prices as it moves even higher, flat up, flat, follow, and it allows it the breathing room to go even higher, all right? As long as Meta is above it, it is good. So that's one confirmation, right, regarding prices just being above this trailing support level. So as I say, right, based on this trailing support, it is based on the ATR, the average true range of the stock, right? We account for volatility, right? If it's very volatile, then there's a little bit more space, between the price and the trailing support line. Like for example, right, you can see that right over here, Meta starts moving up, and that's where we have like more space right over here, more space between the price and the trailing support. But once it starts to consolidate, it doesn't really move much for 1-2 months. That's where the trailing support line actually flattens out. But we're still above it, right? We're still above it. So it's fine, but because of the volatility coming lower, right? That's where there isn't much space between the trailing support and the price. But as long as we stay above it, it is still okay. So what we could do is that we could have a plan to get out, right? To stop loss if the price were to fall below the trailing support line right over here. So we could have a stop loss, like for example, let's say you've got in over here, right? It starts moving up. You could have a stop loss now, maybe below, right? Below this higher trailing support line, something like this, right? And it starts moving up higher. You could have your stop loss right over here, shifted up, and it starts moving higher again. Same thing, you could see your stop loss all the way up. And one fine day, pump, right? It breaks below the trailing support line. And this is where you want to be careful, right? Because that's where you have to give it the space to be above, but yet it goes below it. That's where some selling can come back. And especially, right, if you do see or you get another confirmation whereby the short-term trend turns down. So for example, looking at the green 20 days moving average line. So this green 20 days moving average line represents the short-term trend of the stock, right? So if it's going up, it's good, right? If it's going flat, it means a bit of sideways movement. So up, flat, and there we go. But once we broke the trailing support, right, whereby, it's the breathing room to stay above, what happens? You can see that the green 20 days moving average line actually started from going up, it started to turn down all the way, right? So that's why you want to be careful, because not only have we broken below this trailing support and hit your stop loss to get out, but the short-term trend has also turned down. So that's where you can potentially take some profit. Don't have to be greedy and get out, right? Maybe wait for a re-entry again when the trailing support were to pop up again. So let's fast forward for Meta and see where it is right now. So you can see, right, right over here, somewhere in April, after the sell down due to Trump tariffs, right, we saw the short-term trend, the green line that was going down. It started to U-turn back up. And what happens, right? Well, we got a new trailing support popping out again, right? Remember the trailing support that accounts for the volatility, all right? It stays below the price, right? Allowing the breathing space to hopefully move higher, right? So quite a little bit of a space here, all right? Space, same thing over here, space between the line and the price, a little bit of space, right? A little bit of space over here. So obviously you can see that as the price moves higher, the trailing support, all right, follows it as it moves higher. So as long as we stay above it, I think we are fine, right? So let's assume that you have gone in over here, the short-term trend turns up, you took a position, you ride the reversal, all right? Where could you potentially place your stop loss level? Well, right now, because the price is about $771. So let's say you got in around that 580, 570 right over here, right? And price is $771. Obviously, you're selling on profits, right? So where could you put your stop loss such that, you don't want to put too near such that, it hits and then it starts going up higher, right? But you don't want to put it too far as well. Well, you could use this trailing support level as a guide. So as I say, right, you could put your stop loss now potentially below, right, below this trailing support line. So this trailing support line is around 700. So you could put it like, below 700, maybe about 690, 685, right? Just give it a bit of allowance such that, you don't want to put too near it, but you want to put below it, because if it does break below the trailing support, that is where your stop loss will be hit. And it's normal to get out, right? Take some profit, you still make money. So this is the 1GT Pro indicator that I have, right? We have this trailing support and resistance as one of the very powerful feature, all right? And it allows us to know where to put our trailing stop loss, right? To actually allow our winners to ride, to actually take steps to protect our profits as well, while allowing the winners to ride, right? And not just, hoping that it will go up and not do anything. So based on this One Good Trend Pro indicator, well, I can also turn on the bullish and bearish signal. This is another box, another confirmation. Let's take a look at it. So you can see right over here, I've turned on the bullish and bearish signal, and very quickly you can see that that's where we actually had a couple of like bullish signals coming out. 1, 2, 3, 4, all right, prices above the trailing spot, and it starts moving higher and higher. Does it make sense? All right, so that's another confirmation whereby, we got bullish signals while staying above the trailing support. That can guide you to, enter more positions to ride the reversal, to ride even more upside. Even for here, right over here, as I say, right, we got a trailing support popping out. We got a new 1GT bullish signal, right? The short-term trend, the green line was going down, started to turn up, right? Of course, we got bearish signals coming out, it starts going down, right? So you want to be careful, as I say, right? If it breaks below the trailing support level, a bearish signal appears, the short-term trend turns down, please get out, please take some profit, right? Wait for a re-entry again, be patient, wait for a new bullish signal, wait for the trailing support popping out. That's where you want to get in, right? But when you get in, now you have a plan to protect your profits with a stop loss that actually follows the trailing support line. All right, let's take a look at another case study. One of the Singapore stocks that we covered since beginning of the year, and this stock is called ST Engineering, right? So you can see that this stock, right, has been on our watch list. The longer term trend is up. The short term trend based on this green line is started to turn from slightly flat all the way up, right, starting from January and February 2025, right? And the thing I want to share with you guys would be this green upwards moving trailing support lines. I say, right, this trailing support line, it gives the stock the breathing room to move, right? It accounts for the natural volatility. So you don't just get out, right, stopped out, shaken out, and it moves even higher. So we give it enough room such that those natural pullbacks, right, don't stop us out for nothing. So for ST Engineering, you can see that this trailing support line, right, has popped up since January 2025, right? And so far, the price is still above the trailing support line. I mean, it's still above, right? Look at this, right? It goes up, it follows up, follow. And right now, the trailing support that, first popped up when it was around $4.60, the trailing support has gone up and up and follow until it is now $8.35. Does it make sense? So this trailing support follows the stock. It goes up higher, it follows it, but not following too tightly such that there's no space, right? It follows it, give it the breathing room. So as long as you're above it, as I say, it looks okay, right? And if you don't have this trailing stop, as I say, right, most people who do not have this, trailing support level, what happens is that, well, they might see a little bit of selling over here, right? So for example, a little bit of selling pump, it might break a bit of support. You get out, right? Over here, look at this, right? There could be a horizontal support right over here. Let me just show you. So something like a horizontal support, it was like consolidating. over here. So let me just put this in green color. So yeah, that was like, we started to see a bit of consolidation above this support level, and pump, we broke down the horizontal support level, right? And that's where most people might freak out, right? Oh, it broke the horizontal support level, it's going to go down, it's going to crash and stuff. So most people might just want to like get out over here, all right? And you get out and next day it starts rebounding and goes even higher, right? By another 30-40%, right? Why? Because as I said, that is a horizontal support level, right? It does not account for the volatility. It does not, use the average true range, all right, as a kind of like a gauge to measure the volatility and give space for the stock to move, right? It just goes below a horizontal support, and you might think that the stock is weak, but actually it's still okay. It's just the natural, movement of the stock. It's just a natural volatility, right? Just moving up and down. It's normal. So if you have this trailing support level, right, based on our ATR right over here, well, that will be really good. You can see that, actually, it could be a good opportunity because as a dip, it was actually very near the trailing support level, right? And of course, we actually saw some bullish candlestick bars right over here that could actually, instead of getting out, you could actually take more positions to get back into, right, the reversal. And yes, indeed, right, it did push away from this trailing support and it starts going even higher. Even here, right, it dipped, it neared the trailing support and it goes even higher, right? So most people get stopped up for nothing, right, at the lowest point because it broke the support and they get out. But in actual fact, that could be a good opportunity. Does it make sense? So right now, right, with the trailing support level, right, so you could have got in this position anytime, right? If it dips to near the trailing support, right, it could be at $5, $6, $7, doesn't matter, right? But the key here is that if you're still holding on to this stock, what would be the stop loss that you want to put such that you protect your profits no matter what, right? So if it goes down below a certain level, you get out, you still make money. Well, that is where we could use the trailing support as a guide, right? As I say, right, you could put your stop loss below, right? This is below the trailing support level. So that could be a level, something like this right over here. So let's say the trailing support is around $8.35. Or we could put it below $8.35. We could put it maybe $8.28, $8.30, right? Just give it a bit of allowance, put it below the trailing support level. So one fine day, if the price, I'm not saying that it will happen, right? But one fine day, right? If the price were to finally, after like 6-7 months, is still above the trailing support, right? But one fine day, if it were to go below or break below the trailing support, this green following line, right? I think get out, it's fine, right? We would have a bearish signal as well, or maybe the short-term trend would turn down as well. That could guide you to get out and lock in some profits. And when you do that, you can see that you have kind of like fully maximize your profits. You have really allowed this winning stock to run, all right? And there's no second guessing, there's no emotions or thinking about when to get out on that, right? So when it's time to get out, you get out. If not, continue riding. So what we could do is to turn on the bullish and bearish signal. There's another confirmation. You can see right over here, 1, 2, 3, pump, right? So yeah, when the trailing support pop out, we actually got a 1GT bullish signal popping out, right? We got another 1GT bullish signal popping out while we're still above the trailing support, and it started to move up even more, right? So yeah, bullish signals as another confirmation of even more upside, together with like the trend indicators like the moving averages, right? The long-term trend is up, the short-term trend is up. So that's why we could continue riding this stock, all right, as long as it holds above the volatility-based trailing support level. So there we have it, guys. I hope you like this video regarding the trailing stop, right, or this trailing support level, whereby you can protect your profits while allowing the stock to ride even more, right? So if you want to find out a little bit more about the entire one good trend strategy, or perhaps how this is just one confirmation out of 7 confirmations that we look out for, well, you could attend one of those free webinars that we're running, right? The link is right below the video. Click on it, register for it, and that's where I'll share you guys a bit on the entire strategy. How do we filter out the top winning stocks, and more importantly, how do we know when to get in and get out of them, right? Using the trailing support, all right, using the moving averages, taking a look at the trend as well in the longer term and short term, and kind of like, putting everything together systematically, sequentially, step by step, right? I'll see you in the free webinar. Thank you so much for watching. Joey here.